Hello and welcome to my next review of the war in the markets. Well, a very fascinating and interesting day today, and it's going to be a good discussion on what happened today. So, first, the macro backdrop. The geopolitical situation worsened because Iran suddenly struck Kuwaiti airports. So, Kuwait shut down its airports, a lot of, and there are rumors of strikes on Bahrain also. So, clearly a big setback, and Brent crude showed the impact by almost hitting 97, 98 during the day. Consequently, the inflation numbers for the US are also looking very challenging. And currently, though Mr. Walsh is yet to do his first policy meeting and speech, the market is currently pricing between 60 to 70 basis points rate hike. Read my lips, rate hike, not a rate cut. Now, Mr. Wash's appointment by Mr. Trump was to get a better person than Powell, right? But the way the inflation is, it doesn't look like he's going to be in a position. And currently, the market is pricing in a rate hike at about 60 to 70 percentage probability. So, which means that the dollar strengthened today, getting closer to 100 DXY index. The US 10-year rates also increased by 5 basis points from 445 to 450. And naturally, there was pressure on the rupee also, and the rupee weakened by about 40 basis points from yesterday's 95.28 to 95.83. So, all around, there was pressure today in terms of the currency, the crude oil, and the geopolitical backdrop. So the markets started in a very bad way. But just remember, yesterday also it was the same story. Yesterday also the market started in a very bad way, and midway through the day session there was a strong recovery, and yesterday the indices ended up positive. We had an advanced decline yesterday of 1800 to 1200. Today, what happened? Well, today the situation was fairly similar in the sense that after a sharp sell off, the markets bounced back, right? And in fact, the bounce back was not good enough to lead to positives. So you had the mid cap index down 33, sorry, large cap index down 33 basis points, mid cap index down about, I think, all 20, 30, small cap index also down around 11 basis points, and micro cap was up about 24 basis points. Okay, so today's recovery did not end up in a positive territory for the index, unlike yesterday. And what is the reason for that? Two, three major reasons we will discuss. But the first is that we have to look at the fact that the advanced decline ratio was the mirror image of yesterday. Yesterday I said 1800 stocks up and 1200 down. Today it was 1200 stocks up and 1800 down. So clearly, the way I read this is that overall the retail HNI participation was a bit weaker today, though the microcap did end up positive, right? So that was one thing to see, that there was nervousness today despite a strong recovery. In fact, every single index that I saw recovered from the beginning of the day towards the end of the day. All was a V-shaped recovery today. But then there is a big elephant in the room, right? The IT index. I will come to discuss that, but allow me to tell you one more piece of information. So, in this geopolitical backdrop, what did the FIs do? They actually sold less than yesterday. Yesterday, you recollect, they had sold about 8,000 crores. Today, they sold about 5,000 crores. But yesterday, DIS outbid the FIIs by about 9,500 crores of purchases. Today, they just matched them. There was not much difference. 5,500 odd crores of sales by FIIs, 5,600, 700 crores of purchases by DIs. So today DIs only matched the FIIs toe for toe, right? Whereas yesterday there was a slight positive. So that is another reason that the indices, despite a sharp bounce back through mid-session, could not end up in a positive territory. But now let's come to the big news of the day. The IT index, which over the last 3-4 days had been strongly bouncing back, almost 8% I think the bounce was, today gave up most of the gains of the last few days and was down 5.57%. Now you must be wondering, what happened overnight? last 3 days there was a nice momentum building up, and I explained in the last 2 days discussion. I think I spent a significant time discussing only IT on this talk, right? And saying that there is a value-based buying happening, that there's a tactical trade also, that our expected rupee depreciation was playing in, that there was news that AI-wise they are now getting orders for AI consulting, and so that situation looking better. Internationally, companies like Snowflakes and Accenture and all had indicated that they are doing better on the AI front. So all of this suddenly one day just evaporated and disappeared. Is it? How did it happen? So I naturally had to dig a little deeper to find out what exactly overnight can a change situation change. Well, there was a culprit who was a villain of the piece. I think, to my reading, the villain was Jeffries, the international research cum broking house, who put out a report on the IT sector today. And they put out a very negative report. Essentially, it was about TCS and Mahindra IT, but it was also on all the IT companies. So that's what I believe triggered the sudden sell-off in Indian IT. And I looked at it and I give you share a few highlights of why they have given such a negative, because they have downgraded a lot of IT companies, they have put a lot on hold and underperformed. So what is the situation? I will not go stock specific, but overall what they are saying is 3 4 facts. Please note them down very clearly. So first they are saying that the IT sector, they have done a model of how much the business will last based on this, how much additional AI based business they can get, and complicated calculation, and then a terminal value they have attributed. They have given a very detailed computation. But as a result of what they are saying is that today Indian IT sector is quoting at a 32% premium to the international large IT company Accenture. So they are saying that this is not justified. First point of view, saying that no way Indian IT companies are going to do better in an AI world than a big behemoth like Accenture. That's one takeaway. 32% premium valuation is not justifiable according to them. That's number one. Number two, what they are saying is the IT index has corrected compared to its long-term average. They accept. But they are saying that it is still quoting at a slight premium to the Nifty. And they are saying that the IT earnings projection, they have corrected down all the projections to various levels. I think large caps to about 2 to 3%, mid caps to about 5 to 6% IT companies. And they are saying that the earnings of IT companies are half of the Nifty's earnings. On how on earth can you justify the same valuation as a Nifty? So that is the second very strong point that they are making. And these 2 points combined with the fact that overall they believe that while AI business will give them some business, the rejig in the whole model and all is going to hurt the IT company. So overall, it was this very bearish report on the Indian IT sector which I believe triggered the massive sell-off today. That's what I read. If you have other opinions, you can tell me in the comments. But as a result, now the outlook for, well, tomorrow, it's very hard to say, but I just did one very small calculation just to leave you at the end. So I said, what if the IT index had been flat today? It has been rising the last few days. Would believe it or not, the Nifty, the mid cap, and the small cap index all would have ended on the positive today if IT had been flat. So it is the overall 5.57% correction in the IT which has made all the indices end in the red today. Microsoft micro cap was already positive 24. And how much would have? I think Nifty from a minus 33 would have been plus 17 basis points. And it would have added about 20 basis points return, turning them positive to both the small cap and the mid cap index, and another 20 basis points to the micro cap to end up with 43 basis points positive. So clearly IT was that single villain which made these indices end in the red today. And if the IT had been flat, they would have been actually green. And so it would have been very similar to yesterday's mid-session sharp bounce back. So I believe that this kind of a thing will continue tomorrow and day after till the RBI policy clarity comes, right? So look forward. I hope you enjoyed the session today. Look forward tomorrow.